Well, good afternoon, traders. And it's been a session more of reflection than anything else here in Asia. We've looked back at the session that was in Europe and the US, and we've seen some fairly decent moves and punchy sell-offs coming through in the back end of the curve. If you have a look at German bunds, they've had a big move last couple of days. You know, we saw overnight some sizable moves that really flowed over into the US session, and the US Treasury market was getting sold off across all parts of the curve, but specifically in sort of 10s and 30s. And then we saw the US CPI number, which came out slightly hotter than expected, and that gave it extra legs. Now that has actually played through with selling in fixed income here in Australia, but it hasn't been as much of a headwind as I thought it probably would be. If you have a look at the boards at the moment in terms of equity markets, well, the Hang Seng's up 32, so a little bit of buying there, nothing too spectacular, but it's moving higher. The Japanese market up 9, the CN50, the Chinese A50 index there up 63. And then you've got the ASX 200 down 12 points or so. So very, very small moves on the session in percentage terms. If you have a look under the bonnet in the ASX 200, well, mining stocks have been hit pretty badly. You're down 90 basis points today, and that's being offset with some buying in the financials. Financials up about 0.4% at the moment. So that's a market across Asia which is seeing some sort of fairly mixed but tepid moves and very sanguine conditions there. If we have a look at our calls for Europe at the moment and the US, you can see the S&P 500, US 500 up 3,005, so up 6 handles there, but it's just finding a footing above that 3,000 level. So it's just grinding higher as we speak. And you can see the Wall Street cash there, 27,159, up 71 points there. These are both markets that you really have to keep on your radar. Next week, we do have earnings season. Tonight, we don't have any really major big data to drive. We will be keeping our eye on US bond yields and whether they become more of a headwind for equity markets. But we've got PPI inflation, though, so business inflation, the inputs there. And, we're not expecting that to be necessarily a game changer and a changer of rates pricing. But as I say, we go into a next week's earnings season and we get a number of the banks, JP Morgan, Goldman Sachs, Citigroup, coming out with numbers. We've got Netflix later in the week, and that's an important one because the crowd, that's one that we're going to probably see a lot of interest in from clients. We have just allowed people to start trading shares. So if you want more information about trading US stocks in the post-market session or the cash session, do reach out. We're more than happy to talk about our offering there. But Netflix is one I expect to see quite a bit of interest in, and the implied volatility on the day is quite high, and the market's expecting about a 6% move in either direction. So that's one that I think will get quite a lot of attention on the floors there. In FX markets, not really seeing too much. The markets, the volatility in FX at the moment is shot to the floor. Have a look at this chart here, the JP Morgan Global FX Implied Volatility Index. This looks at implied volatility in the big FX pairs, and you can see this now trading at multi-year lows. Now, of course, implied volatility is just an expression of how people think moves are going to happen over a certain period. It doesn't necessarily suggest that price is going to go up or down. It just talks about the extent of the move. And if you look at this index here, which sort of aggregates implied volatility together, it's very, very low. So the market's very calm in FX. People are not expecting big moves to play through. Of course, we look at that when we look at our position sizing, how much risk we're taking on each position. And right now, FX volatility is very, very, very calm. Even if you take out volatility out 6 months and we talk about what's happening in Brexit and other factors there, the market is just saying, well, we're not too concerned about what we're seeing there. Gold as well, we're seeing a bit of business there. It's one of our most traded products. It has been for some time, but certainly 14.08 at the moment, up nearly $5 on the session. It continues to trade this range that we've been seeing, 14.25 on a closing basis. We've had it a couple of times above that level. The traders have sold straight into it, but I think an upside break of 14.25 on a closing basis would be very bullish on this continuation that we've been seeing. On the downside, though, we've been talking about 13.81. If we get a break below that level, I think we'll probably see a bit of more of a protracted sell down. As it stands at the moment, there's price consolidation. We've had a big move up about 13% from late May. Markets just saying to themselves, we don't really have the catalyst now to push us higher. At the same time, the bears are not really getting emphasis as well. That battle will probably continue to play out for some time, in my opinion, ahead of the FOMC meeting. And I think, if it does break out, that trend needs to be respected. So a fairly calm day today. We don't have a lot of data to drive us. We haven't had the Chinese trade data coming out today. That will come out a bit later on. Pretty sane conditions. I think next week, the big one, which we really have to look out for, is what's going to happen in US earnings season.